Hello, this is Prashant, and I welcome you to this video of Nifty weekly range. And in this video, we'll be analyzing the Nifty weekly trading setup for the third week of April. Well, to start off here, we've got the Nifty daily chart in front of us, and we can see here that the prices are slightly above the 20 and 50-day moving average. Well, that's a good sign for bulls. Bulls would be hoping that the market stays above the 20 and 50-day moving average and it tries to reach the upper end of the range. This black trend line over here, this is the upper end of the range. And once it crosses, then the bulls would be hoping to reach out to the all-time high. And whereas the bears would be hoping that the prices come as close as possible to this long-term support over here, and if they would happen to break this long-term support, it would be a good short trade. Well, however, as of now, we don't think that the market will go below the long-term support, that is this level 14,300. It would be really difficult for the market to go below that, and the probability of as of now would be that the market will reach out to the upper end of the range. Well, this is the daily chart. Let us also look at the weekly chart of Nifty and try to analyze how is the weekly chart looking like. Here we go. This is the weekly chart of Nifty, and we can see that there has been a tremendous bull run since last 1 year, and the last time we consolidated like this was somewhere over here, where we consolidated for few trading sessions, and then we started the upward journey. Here also, here this grouping of bars is around 8 to 9 weeks, and this is the biggest run of consolidation in the last 1 year. So around 8 to 9 weeks of consolidation is a good thing. We expect some more consolidation, and after that only market can either resume the trend up or it will reverse the trend. So it would be interesting to see where does the market goes from here. If it breaks any range, either the upper or the lower range, then it is a easy trade. It is a easy trade to go in the direction of the trend. Well, now let us go and look at some of the important data points from last week trading. Here we go. This is the option chain data. In terms of open interest, the call side has 15,000, 15,200 and 15,500. The maximum open interest is at this level. So 15,000 will definitely be a big resistance for the market to cross, followed by 15,200 and then finally 15,000. Anyways, before that, the all-time high of 15,400 is there. So this is the call position, and whereas on the put side 14,500, 14,800, 14,500 and 14,200 has got the maximum open interest. But to be on the near term front, 15,000 to 14,800 would be the range to look out for. So these two levels would be the important level as of now. Okay, one thing to note over here is the number of calls which is written is much higher than the number of puts which is written. So it gives an indication that the market participants feel that the near term would be slightly bearish. And when you see the increase in open interest, 15,500 has seen the maximum open interest, and even 15,000 has seen the maximum increase in open interest on the call side, whereas on the put side 14,800 has seen a considerable amount of open interest. Well, let us discuss about the FII and DII activity. On the last trading session, that is on Friday, both FIIs and DIIs were net sellers. So this, though it's a small amount, but the FIIs and DIIs were net sellers. However, on the weekly front, the same story has continued. No, it is the other way around. The FIIs were net sellers and the DIIs were the buyers. So the FIIs have been buying since in so many weeks, and now it only recently we have seen that the FIs have stopped their buying and the DIs have stepped in and they have started to buy. Well, on the index front, the future index long of FIs, which was normally above 60%, has slightly gone down to 58%. However, overall, they are still long at 57%. Well, let us discuss the sectoral performance of last week and the last trading day. Nifty was slightly down, and on a week to week basis also. This is the week to week data. It was slightly down, only 0.22%, so it was more or less flat. However, the important thing to note over here is Bank Nifty. Bank Nifty is down more than 4% today, in the last week. So definitely Bank Nifty is looking highly uh, weak as compared to Nifty. And as far as the other indices are concerned, IT index has run up quite a lot. 5.34% it was up in the last week. So, and mind you, there are some important results which are coming up. TCS result is coming on Monday. Infi result is coming on Wednesday. So the market has already anticipated a really good result in for these two stocks. So if the result doesn't turn out to be as good as the market thinks, then we can see some profit booking, or or it could also happen that before the result, people will book profit. So we'll have to wait and see how the TCS results come, and more or less based on the TCS result, Infi result will also be almost the same. And the other top performer of last week was Nifty Metal. Nifty Metal was up by a whopping 6.64%. So this is mainly due to the increase in commodity rates, and the bull run has been happening since so many weeks now in the Nifty Metal Index. Even Nifty Pharma, after the resurgence of corona in most of the states in India, we have seen that the pharma sector has started to gain. Even the FMCG lately has started to gain. The FMCG was up slightly by around 1% in last week, and this uh, private banks and PSU banks were the top losers in the last week, as Bank Nifty overall is weak, really weak. Well, the other important thing to note over here is India VIX. It went below 20 now, so it is at the lower end of the range. If we look at the last year's movement of India VIX, so this is at the lower end of the range India VIX. Well, in the Friday's trading session, the HUL was the top contributor on the upside, followed by Sun Pharma, and the big heavyweight Reliance, it was down, which has dragged the market in the Friday session. Well, now let's just go and look at the US bond yields, and as of now, there has not been too much of talks about the US bond yields. Let us look how the US bond yield has fared in the last week. Here we go. We can see that the even the US bond yield is consolidating since last 2 weeks. So it is important that the yield stays here and it keeps on consolidating for a few more weeks for the bulls, and whereas the bears would be hoping that after some consolidation, it again resumes the bull run of the US bond yields. Well, that's all that we have for today as of now, and thank you everyone for watching.